As SABC3 viewers, we'll continue with the market update and just take a look at how things have performed. Of course, it hasn't been the best of times, seeing a complete rout. This JSE All Share is expected to perhaps even hit its worst year in quite a number of years, around 8.74% lost in October alone. That's before the market started trading earlier today. With that, let's just unpack the rest of the European and local markets. Gary Boyson from Ranswest joins me now as we unpack a look at the market as well. Gary, thank you so much for joining us, bud. Well, it's been a negative twist for the JSE All Share, over 8.74% lost, and clearly headed even lower at some stage. Do you think that we're in correction territory? Are we seeing things really going from bad to worse here? But it's not crisis stage, right?
Well, it depends, I suppose, how you measure it. So if you're measuring it in rand, it doesn't look too bad, and it does kind of look like a natural correction. I think if you look at it in the context of what's happening in the emerging markets as well, again, this is not necessarily, as negative towards the local economy as potentially people would have you believe. But once you start looking at it in dollar terms, and you see that we're down more than 36% in dollar terms, sure, that is very, very weak. When the correction will end, that's anyone's guess. But I think there are
maybe today. I mean, 1.25% higher.
We're looking a lot better today. We're still seeing the big heavyweights like Naspers under a little bit of pressure today. So that kind of not even allowing the market to recover as much. But you see Mediclinic up over 5%. You're seeing the likes of Richmond also bouncing off that 100 Rand level. That's also a big constituent of our top 40 index. So that helping to lift markets slightly. But I think what should give people a little bit of encouragement is the fact that a lot of our smaller mid-cap companies are actually being delisted. You're seeing private equity firms coming in, buying the entire share issue of the stocks, and that is very, very optimistic. That's saying that the smart money, as they call it, is seeing value in our market, and they're saying, well, if the kind of public investors and the retail sector isn't interested, they'll take it off and take over these companies directly. So yeah. I think that does for me signal that perhaps some of the worst pain is through, and also just looking at the drop in volumes that we're seeing in our market, it's absolutely astounding. It's like there's no one interested, and as Warren Buffett says, you need to be greedy when others are fearful, and certainly there's a lot of fear at the moment. One
would think it's already December the way we're going with this trading. Look, our market is up, and that's despite most of Asia going down today as well, earlier this morning. Yeah, so it was a mixed picture in Asia, and I think again we're seeing some positivity coming through from the European session. We're still very much in the heart of earnings season. We think of it as US earnings season, but certainly a lot of European companies reporting as well. So we got numbers out of HSBC today, a big beat on estimates, helping to lift sentiment in Europe. That feeding into our local market as well. So some earnings, a quarterly update then from MTN. It's looking good despite Nigeria, and most of the growth seemingly coming out of that part of the world as well. Yes, so much of this comes down to kind of trying to work out where there's value, and there's a lot of uncertainty in MTN just around the dispute that they have with the Nigerian authorities. But the actual subscriber numbers, I mean, ticking up, which is great. I mean, MTN now servicing over 225 million people across multiple territories, multiple geographies. South Africa was under a little bit of pressure compared to some of the international operations, especially Nigeria. So we saw subscriber numbers in South Africa fall slightly, but I think what again was encouraging for those numbers and what's helping to lift the stock today is that the metric, the ARPU metric, which is the average revenue per user, came in. It was just above 98 Rand per user, and that's a beat of expectations as well. So MTN managing to almost extract value from the markets, even though they did see that the South African subscriber numbers come under a little bit of pressure. This company is cheap. Let's face it, MTN is a very, very cheap company at the moment, and if they do manage to settle the dispute with the Nigerian authorities around the way they repatriated funds, there could be significant upside in MTN share price, but that really just keeping the stock under pressure at the moment. Yeah, I guess it will be tentative for most people, but certainly, as you say, offering some value there. Famous brands coming out with their interims as well, around 5.4% gain for revenue to 3.6 billion. A good mark still, surely.
Not a bad mark, but remember that you've obviously got that the GBK impairment inside it as well.
Burger company, I think it is,
which again, it speaks to the South African companies that have gone offshore. They've kind of discounted the South African market and said, all our local operations are great, but we have to diversify our earning streams, and just showing how dangerous it can be to go and operate in a market that you don't understand fully, and making acquisitions almost at any cost. So I think again, you look at the operations locally, especially of Famous Brands, it's still a very, very good company, and hopefully now that impairment is through, you might see some upside in the numbers going forward, a little bit of optimism returning to the sector. But again, you look at the volume that was traded. I mean, we watched, we were looking at Famous Brands at open. No trades for the first, it was about 10 minutes. I mean, that's absolutely unheard of on a company the size of Famous Brands. So again, just speaking to the lack of participation in the market at the moment, and just the very low volumes we're seeing moving through the JSE, as I think investors just sit on the sideline waiting for better news.
Still in that retail space, ShopRite coming out as well with their update. It seems internal inflation is just something they work very hard on keeping at zero, if not negative.
Well, I think they have to at this stage, and while it makes there's always two ways to spin a story, I suppose. And while it makes a good story to say yes, we kept our internal inflation under wraps, this is the number of products that we haven't pushed through price increases to our customers. We remain a great low-cost retailer. That at the same time speaks to investors, saying that with the VAT increases, with the increases in petrol, does ShopRite have the inability to pass on some of their cost increases, which invariably they would have had, onto their consumer? And does it speak to just how much pressure the South African consumer is under? I think it does as well. So it may be a positive angle on a negative story. And looking at ShopRite again, they also had issues around their main DC. I mean, ShopRite really has, it is exceptional in its supply chain management if you compare it to Pick n Pay. I think Pick n Pay is still playing catch up. But unfortunately, a lot of that, coming on the back of a 6-week strike as well. So it's still kind of the South African environment kind of playing into it again, with the fractious relationship between private, I suppose, corporate South Africa and labour.
Is there more faith in South Africa, the private sector? Are they getting back into South Africa, seeking to get more funding in order to expand? From what we're speaking about when it comes to the earnings results, it doesn't seem so. But private sector credit extension, that telling us a different story?
Unfortunately not. Our president is telling us a different story, though. So, I mean, at least that they messed with Summit. I mean, the rand firmed a little bit, after we announced that we've secured, or at least we have pledges for $55 billion worth of investment into South Africa. But that private sector credit extension number, I mean, dropping from 6.7 to 6.3% growth. And that primarily because of the lack of extension to corporate South Africa. So it's certainly still telling a story of a sector that is under pressure and slowing down, and part of that is the general economic malaise, but part of that falling number as well is also certainly got to do with unsecured credit extension as well. So that probably the biggest reason for the drop in the number. Yeah.
Very finally, the rand as well, performing a little bit better than having seen it go to around 14.60 odd last week and beyond. Now around 14.44, 14.40. A fair enough mark, considering that this isn't the place we want to be anyway.
Still, there's absolutely still room for, I think, a firmer rand from here. So again, we're looking at our PPP, which is kind of, if you look in purchasing power parity terms, the rand could still easily move below 14. We've got it's about 13.80 at the moment that our model is saying. But again, this is going to be buffeted by the international forces. So part of that rand strength coming from slightly, I suppose when I say better, but slightly better for markets and for emerging market currencies. GDP numbers are the US on Friday, and that kind of feeding into global emerging market currencies, helping the dollar to weaken slightly and just lifting us a bit.
Yeah. Gary, appreciate your time, but a lot clearly happening, whether it be on the earnings front, economic data, or whether it comes to the currency as well. More business news coming up right after this. Do stay tuned.